I'm Andrew McIlwain. I'm the Managing Director of Investigator Resources. Investigator Resources is an ASX-listed company that's focused on developing the silver project, which we call Paris in South Australia. Paris is the highest grade undeveloped silver project in Australia, with something like $1.5 billion worth of metal in the ground.
Andrew, thank you very much for the introduction. The last time we spoke was 6 months ago when we did a technical deep dive on the project. We went through the exploration potential, the geology, the metallurgy. This time, I'd like to kind of understand your thinking about the company, where we are in this cycle. You know, it's been a downturn in the market and how you're managing things. So perhaps could you just give us an overview of how you've seen your company in the market in the last 6 months, you know, with the share price kind of a bit under pressure and recovering a bit?
Sure. Look, Merlin, if I cast my mind back 6 months ago, I would have said that we were going to start entering a period in the DFS, or the definitive feasibility study that we're undertaking, where there wouldn't be a lot of sort of market sensitive or attractive news coming out. We would be doing some technical work behind the scenes. But look, having said that, in fact, we have done a number of things which are quite prominent. One of the things we did drill a regional target looking for some silver or opportunities for further silver mineralisation. And at Apollo, we found some great silver intersections. But more recently, we also have been able to get an agreement with the native title owners or traditional owners of the country on which we operate. And they've been able to release some area right immediate to the south of the existing Paris resource, which has not been accessible previously, and we'll be starting drilling there in the next couple of weeks. Great demonstration of the relationship we have with the stakeholders, and particularly the traditional owners. So a few things happening, but also in the background, we've been working on the things that start to firm up the definitive feasibility study, which is geotechnical drilling and assessment, further metallurgical test work. We're preparing to undertake water programs, which are both for supply of processed water to the processing plant, but also the hydrology or hydrological considerations around the Paris open pit. So lots of things happening that aren't particularly newsworthy, except for, as I said, some regional exploration results and access to be able to grow the Paris resource.
When you talk about that that new area to the south of Paris, do you have soil geochemistry across it? I mean, do you know kind of how much the resource potentially extends into that ground, or have you not been able to work there at all?
Well, look, certainly we've got some drill holes to the east of it and a little bit further south that confirm that it's the same geological setting as Paris. We've actually got drill holes that run right up against this boundary of this what was the restricted area, with some great silver intersections, you know, a couple of 100 grams per tonne silver intersections. Very comfortable to predict that we'll see that resource extend to the south, and that's where we really add some value to the project by just growing the resource ounces.
And remind me, does it strike north-south? I mean,
look, ostensibly we run on a local grid, which is a little bit off that, but the long axis is generally north-south.
And how much? How you've got 1.2 kilometers in the existing resource, and how much is this new area kind of enabling you to access?
Oh, this frees up at least another 250 metres, but as we've actually not drilled, we've got some shallow holes further south than that, which gives us the confidence that we're in the same stratigraphy, but as I said, at least 250 metres more, so quite a substantial step out to the existing end of the resource.
Okay, good. That, of course, you're going to be drilling that imminently, and that's going to come through. So will you be able to incorporate, should you get success with the drill bit, will you be able to incorporate any additional material into a kind of a mine plan that would be tied up for a DFS in the second half of next year? Or would this just be, not just, but would this be kind of indicating inferred resources that could provide potential future mine life at the back end?
No, look, we're confident that we're going to add resources. So we're going to wait until we've got this drilling completed, assays back, we'll remodel the resource, and then we'll re-optimise the pit based on what we expect to be greater ounces available.
Just stepping back a bit from the kind of the detail of the project work that you're doing, it's a tough market generally. You know, most resources stocks are down in terms of price. You are, yeah, I mean, your share price has held up particularly well, really, compared to the wider sector. You were at 7.5 cents in April of this year, and you're only down a third to just under 5 cents, which is good in comparison to most other companies. But in this kind of slightly risk-off environment that we see in the resources sector, what do you see as being the kind of the wider triggers for getting resource stock performance?
Look, certainly, and I suppose we're demonstration of the fact that we're not a one-trick pony. Whilst we focus very much on Paris, we do have some other opportunities in our portfolio. We recently announced some results from the Morgans, which is out to the east. But again, as I said, we're not focused just on one location. That is the most advanced project we have. But the other side of it is we're a little unique in the Australian space in that we are, as I said before, the highest grade silver project, but we're really a proxy for investment in silver. As I said, 6 months ago, the silver price was $32 or $33 an ounce in Australian dollars. Today, it's 31, which is one of the reasons why we've held up very well. We match the movement in the silver price almost on a minute by minute basis. Okay,
so you're effectively the silver equity in Australia, or the silver developer in Australia.
Sure. Look, there's some other projects that talk about having their silver content, but generally they're base metal projects that have a silver credit. Nothing like the grades that we see at Paris. Paris is 3 times more the silver grades than the other projects, and there's really only 3 other contenders in Australia.
And your market capitalization is a kind of a fraction of the NPV of the Paris project when it gets going. Kind of market cap 65 million. What was the pre-tax number on the PFS? Was above.
Certainly in triple figures, $130 million Aussie. And look, and I think also people refer to, I think, the Lassonde curve, which is that value creation curve when you go through discovery, through that, I call it the ho-hum dips, where you're doing the technical work that we're doing. We're not putting a lot of sort of, really cracker news out into the market that gets people's attention. And then you start to see that curve or your value creation as you go into development and production. So we're in that dip in the Lassonde curve, which a lot of people refer to, where there's still some questions about whether this project will work. That doesn't get answered until we declare the definitive feasibility study.
And do you think that really that comes back to the question of what are the catalysts for price improvement when you're either in the, you said you're a match for the silver price, but you're trading at a 50% discount to kind of NPV, let's say.
Sure.
What are the triggers for unlocking that discount?
Oh, look, we have a couple of things, and they're not up our sleeve. We've talked about it quite openly in that there's over $250 million worth of lead in this resource that has never been basically brought to account. We presented the pre-feasibility study so that we could sort of address some of the concerns of the naysayers about the viability of this project as a silver-only project. Whilst the majority or vast majority of the revenue comes from silver, there's actually $250 million worth of lead that would be going through the processing plant. So some of our met test work is focused on lead recovery, and that's a great trigger for value addition or value creation in the project. We also have, as I mentioned, we have some other prospects which have got great 130-metre zinc intersection, only 80 kilometres from Paris. So at some stage or another, there may well be the opportunity to use the Paris processing plant. But so we've got other strings to our bow. We did drill a great silver intersection out at Apollo, which is only 4 or 5 kilometres away. When we finished the drilling of this resource extension at Paris I'd like to think by the end of November, we'll be back out to Apollo drilling the silver intersections. And your listeners would be aware that we did announce some rare earth intersections out there. They were just good science, where the guys decided that they would go and assay other intervals of the holes we drilled for silver, and we came up with some great rare earth intersections. We're not really blowing our trumpet about that at the moment. It's not our main game, but what we are very conscious of is that you can have great rare earth intersections, but you won't get very good metallurgy or recovery. So the test work we're doing at the moment is, in fact, the metallurgical response of the rare earths that we have found there.
So it's too early to say whether there's any economic reality behind the rare earth intersections.
Yeah, look, I'm a little cautious. There's lots of noise about rare earth intersections, and there's 2 or 3 styles of ionic clays, and you really need to have one or not the other, and we're not sure what we have until we've done this test work, but we'll have answers for that in the next 2 to 4 weeks, we expect. But as I said, it's not our main game. A little bit of an opportunity. It was great science. The guys did some really good work in identifying that opportunity. But as I said, it was in holes that we drilled looking for silver, and in fact, some of those holes we did find silver.
Coming back to the catalysts for kind of unlocking that discount, you spoke about the potential for lead recovery. Part of that DFS work that you're going to be doing is a wider suite of metallurgy. Can you give me any indication of where you've got to in terms of that metallurgical processing, in terms of the argillic alteration, the recoveries? I mean, I think you use 75% in the pre-feasibility studies, your kind of your average recovery across the life of mine. Have you de-risked that further? Even if it's not to improve the recovery, but actually just to get even more confidence in that base level?
Well, we certainly did in the PFS work. Excuse me. When I first got involved in the project, the average recovery was quoted as about 67% across the resource, and that's where we said, look, if we can't get that up by at least 5, if not 10%, then the project's not going to fly. So our initial MET test work that we did during the PFS was, in fact, focusing very much on one component of the resource, which is what we refer to as the breccia transitional material. It has typically low recoveries. We were able to get that from 65 to 72%. And that really made a fundamental difference to as you can appreciate, to the economics of the project. The early scoping study work had looked at lead recoveries and hadn't really spent a lot of time on it. It's not an easy lead to recover. The nature of the mineralisation is that it doesn't float as easily as you would if you had a galena ore body. But it's not impossible. But the beauty for us, in fact, is that there's a lead smelter 300 kilometres down the road at Port Pirie, so we don't have to produce a particularly high-grade concentrate for it to be economically viable, because the transport's only quite short.
Is it a lead oxide that you've got?
Yes, and I think the mineral is a coronadite, and as I said, it's a little challenging, and as I said, we haven't really focused, and that's the focus of some of the DFS work is how do we tune up the lead recoveries.
I'm not going to hazard a guess how you might recover a lead oxide, but
happy for anybody that's listening that might have some advice to help us. But as we've got some good brains on it, and we'll no doubt get some recovery. We won't see the typical recoveries you see of high sulfide material like galenas or so on. But it doesn't have to be a high-grade concentrate to be economic to truck simply down the road.
Just from listening to you, it seems as if the easiest win in terms of kind of value creation for you now, it's not necessarily the lead recovery or the exploration or the rare earths, but actually the southern extension, the native title. Actually, that's quite a big deal.
Look, it is, and it has always been, but we haven't spoken a lot about that because of the sensitivity of the nature of the circumstance. Over a number of years, we've worked with the Gawler Rangers Group, who are the Aboriginal corporation that have what's referred to as consent determination over that area. And we recognise that there are some areas that are quite important to them. But in working with them, we understood what's important to them. We took them back to this area and look, we over a period of time, I suppose they understand how we go about our business. and they were very supportive and have released that area. And as I said, and that's the easiest win for us, just to add. And it doesn't look like it gets deeper at that end. It's the deeper end of the resource, but it doesn't look like it plunges deeper. But we'll know in a few weeks.
Because most of the resource sits at about 120 meters deep. And you said, I think previously you said it goes down to about 140 meters towards the south. Is that about right?
That's right. And mentioned before, we have some other intersections sort of to the east and further south that, in fact, some of them are quite shallow, 60 metres relatively. But when you do look at, and you're quite right, Merlin, the southern end of that resource does bottom out at about 120 or 40 metres.
Okay, interesting. And now the other, again, looking to discount, to remove the discount on the project value, things that other people will be watching include your slope angles on your pit and water. But first of all, geotech and the slope.
Sure. And look, one other issue when you were explaining, I should have a diagram explaining the resource like this. In fact, the pit that we presented in the PFS didn't take all of that resource out, because as you appreciate, you do need to lay that southern end of the pit wall back, and there was some resource continued past that. So the more resource we add to that, the further we're going to be able to push that wall south. Geotech work we drilled 16 holes in and around the pit. We're planning on staging the pit, so we needed some sort of holes in the inner part of the pit. The work that's happening there, as said, referred to some hydrological study that's going on, will determine whether we can steepen those walls up. And they're big wins for us, particularly one side of the pit. It's been a long time since I've done a lot of mining engineering, but it certainly looked like it was a very conservative pit wall angle for what's a relatively short life project as well. If we looked at this having to stay open for the next 50 years, you might have a different factor of safety. But I think we can, with a relatively short life. And in addition, one of the plans that we will work on, we didn't present in the PFS, is in fact backfilling some of the old, because we've mined the pits in sequence and in stages, we'll backfill some of the pits. So they'll have quite short exposure periods as well.
When you the mine life, I think, is 6 years, isn't it?
Yeah, it is. It's sort of unnaturally 6 years. We mined it a lot harder and faster than you would typically mine it, and we did that because there was quite a substantial. Because it's really there's little drill and blast required. It's quite a soft material. We believe we can rip and dig about 70 to 80% of the material, and there's quite a step change in mining costs by bringing in a much bigger fleet that can mine faster. And in the PFS, we actually mined we mined the pit out within, I think, 18 months before the processing was complete. So we had quite a stockpile in the PFS plan.
And let's in an ideal world, in a perfect world, if you were to add, let's say, 20% more resource to the south, that would increase your mine life by a year or two. Is that, or would you
of that order? Yeah, absolutely. Yeah.
Or would you look to increase the throughput rate of the process plant?
Look, I think the plant was at 1.65 million tonnes per annum, and it's right at the high end of size for that size of resource. And as I said, we pushed the plant size up to really accommodate a really fast mining activity. We'll finesse that and get a better balance in the DFS. But certainly, one of the things we're looking to do is try and push this mine life out to 10 years. There's a whole range of other financing opportunities present themselves. And in fact, even a bigger solar farm is something that's possible when we get a 10-year mine life. Okay.
Yeah. And, that means you need some good luck and some good science and hard work on the exploration.
We're pretty good at the first two. We'll see how luck goes.
Good.
Science and hard work we're good at. So,
then water.
Sure. And I presume the listeners have maybe seen the picture that sits behind me. This is in fact the Paris open pit. I'm looking almost to the south. To the north, and that area that I referred to is sort of behind my chest, the restricted area, but. It's a very arid area, part of Australia. Thankfully, it's not arable farmland. There's no viable agriculture there, so it's not a major challenge for us. And And in fact, it's not a major issue. There's no main waterway or watercourse through there. But the challenge is that there's very little available water. We, in our exploration drilling, identified a paleo channel about 12 or 14 kilometres away, affectionately referred to as Hector, and that's what we anticipate is the source of water for our processing plant. And what we do need to do is do some more detailed pump and drawdown tests. That's required both for our own satisfaction that we can get enough water for the process plant, but also to be able to get it permitted to be able to provide water to the process plant through the regulatory permitting process. And just a little aside, we are promoting what we refer to as dry stack tailings rather than simply pumping the tailings out into a pond or a dam, as people conventionally do. We will filter and truck the tailings out. One of the beauties of that is that you recover far more water out of the tailings than just by pumping them out. And for us, water will be a precious commodity. The more water you can recover out of your tailings also assists because the water's conditioned. It has the reagents and pH balance in it already. So as I said, dry stack tailings, it'll be the first one in South Australia if we move forward and do that. And certainly the regulatory, we've probably set a path for other projects in South Australia. We've been talking about it for a while, and I don't think they'll like anyone presenting a conventional tailings facility.
You've said that you've done some drawdown test work already on the water. What are you seeing? Is it encouraging? Are you confident that you're going to get enough water, or is it still very much to be determined?
Sure. We've done some other geophysical work over that area as well, so we have a reasonable understanding of the extent of this paleo channel. In one of the boreholes, or in one of the exploration holes, the water's within 4 metres of the surface. It's not great water. It's not potable and certainly not palatable enough for stock water. So it has a low pH and a high salinity. So it will require us to buffer that or treat it to using the process facility. But we haven't done any extensive drawdown of sort of megalitres per day or per day type. We've done small pump tests, and we've not had enough monitoring bores in the region to understand the effect on the water table.
When do you think you'll have completed that water test work, and when do you hope to announce the results of that?
Look, I expect we were going to kick it off this year for a whole range of reasons, and in fact, part of it to do with resources. We've pushed that water out to personnel resources. We pushed that water test work out till early next year. It's not a rate limiting step for us. As it's especially that we've now taken a little bit of a breather in driving the DFS forward until we complete this resource drilling, because as I said, we want to bring the additional resource into the scenario. So
feasibility probably towards the end of next year rather than kind of just in Q3.
Look, I'd expect so. One of the better things that's happening at the moment is the assay turnaround time in laboratories has tightened up a little bit. It was sort of even pushing out to 3 months. We expect to get our assays back within about 6 weeks. So we'll have that drilling finished by the end of November. So a new resource would be the first thing we do next year.
Okay, good. Well, let's go back to macro, because I think well, before we leave the detail, effectively what you've been telling me is that the ho-hum, those doldrum periods in the Lassonde curve, you're going to be spicing it up or de-risking it with the water permit, so the water news. That's a key factor, and then news on the resource growth. That's the other kind of the real trigger for value growth. That's what you see there. Am I right?
Very much so. And sorry, well, also sticking with how to extend the mine life. It's also with regional exploration, and as I said, we'll be back drilling adjacent to that silver intersection at Apollo this year as well. And certainly our major shareholder is convinced that Paris shouldn't be the only silver mineralisation in the district, and we've just got to track down the others. Who's the major shareholder? Jupiter Asset Management, UK-based fund, was Old Mutual.
Yeah. I know Jupiter. Yeah.
Sure. So they hold 15% of the stock. So I'm glad you picked up my reference to the ho-hum part of the curve. But as we've got some other things happening. As I said, it's certainly regional exploration. We'll be doing some more work on Morgan's out to the east. And again, that it looks like it's more base metals, but certainly have some interesting silver out there. And again, having engendered a very good working relationship with the traditional owners, we look like we'll sign an agreement to get access to some ground there that we haven't had before as well. So we've got plenty of. We're not shy or short on exploration opportunities.
Good. And tell me, what's going to drive the gold price, or what's going to drive the silver price? Are there any catalysts you look at on a kind of a macro basis that give you hope or confidence?
It's probably this is where I turn it around and ask you the question. Tell me what's going to happen with the US economy. It certainly where once interest rate or inflation in the US is under control, I think, and I'm surprised we haven't seen a flight to precious metals prior to this, but it's certainly hanging in there. But all of the market watchers are predicting that both gold and silver are going to move north. But the other thing for silver, in fact, is that the supply-demand balance or metrics is changing quite dramatically. The major silver-only producers are in South America. Their head grades have dropped dramatically in the last decade. A large component of the 900 million ounces of silver produced a year come from base metal operations, and there hasn't been too many new ones start of late. And the other part of the silver thematic is, in fact, just an explosion in consumption in electric vehicles, and in fact decarbonisation. So solar panels, electric vehicles, every circuit board's got silver in it. So that's the other part of the supply demand that's been sort of just sitting in the background. There's obviously some jewellery uses and investments in investment grade silver, but certainly the industrial use of silver is going to balloon.
A silver bull.
Well, if you subscribe to the Silver Institute, they just say it's on fire. So as long as it doesn't burn out, we'll be right. But
good. Well, there we go. So you're confident and comfortable with the kind of the fundamentals of the silver market, and you've got a plan to get through the ho-hum period of the Lassonde curve.
Well, look, a couple of, I suppose, little anecdotes. There's a silver refiner here in Australia that I buy some silver bars. It's a bit hard to put things close to my face. Some silver bars from, and the guy that owns the refinery has been working night shift. He's in, what are we up to? In fact, the 1st of November. So in the first 4 or 5 months of this year, he's already done over half his annual silver production. And I read the other day that the American Silver Eagle, in fact, people were paying a $10 premium for that at the moment because there's a dearth of supply. So, the consumers or the refineries are telling me that there's a dearth of supply, and that can really only mean one thing:
prices will go up.
That's right, and people still want more.
Well, Andrew, on that note, I say thank you very much. It's been a really good kind of update from you. It's good to get that kind of investment thematic. In this depressed market, we are looking for advice for investors, retail investors. How do you play the silver space? How do you choose a company? Oh, I guess here's a question for you. Why should they buy you, and why not an ETF? I mean, you've said that you're more or less a proxy for Australian, one of the proxies for silver in Australia. But why buy you, and why not just buy Silver Eagles or an ETF?
Well, I suppose you go and buy an ounce of silver, it'll cost you, $31 Aussie today. Our share price has got some other drivers that will, as I said, once we've completed the DFS, but other exploration opportunities also provide you an uplift over and above the exposure to silver. So we track silver, but we do bounce up when we have a good announcement into the market. And so we've got some exploration opportunities in front of us that we're pretty confident will be able to add some value to the company. And I keep referring to, whilst we've got to get it out of the ground, but we're a $60 million market cap company with $1.5 billion worth of silver in the ground.
So that's the risk reward. I mean, the risk is execution and getting it out of the ground, but the reward is being able to unlock that value.
Sure, and as I said, we need to add to that, and we've got a few things, in train to be able to add to that value.
Andrew, thank you very much.
Merlin, always my pleasure. Thanks very much.